Hi, this is Robert Clinky-Beard with the Commercial Landscaper Podcast. Really excited to spend the next 30 minutes with you and really find out what ways in which we can improve your business. If you go away with 1-2 improvements to your business on a weekly basis, that makes significant progress over the year. We really hope you enjoy the shows. I encourage you to like and share with your friends, your network, your family members. Based on my book, The Ironman Mindset for Entrepreneurs, I want to pull out some type of content, some type of nugget every single week, meeting a guest, and that helps you develop your business and become more profitable. So check out the Wilson 360 website, look at some of the coaching programs, look at some of the training courses, click on those links, figure out how can we help you. We have now 14 people on the team that can come and help your business. So cheers everyone, have an awesome day. Hi, this is Robert Clinky-Beard with the Commercial Landscaper Podcast. I'm really excited to be joined here by Chris McTyre. Chris, welcome to the show today.
Thanks, Will. Glad to be here.
For our audience, can you just maybe give us a little bit about your background, maybe how you got into the business, a little bit about your business, then we'll jump into our topics.
Career in finance, some M&A experience, mostly in like the petrochemical area, oil and gas. Started a winery on the side, grew that business as like a small local winery. Still in operation, but I stepped back from a lot of the day-to-day. And then it was through working on M&A deals, investing in real estate, looking for better opportunities for higher ROI. Became difficult to, like, heading into 2020, it became difficult to find cash flowing properties as easily as it was earlier in the decade. And then I kind of realized, like, maybe I could apply some of the M&A work to something that I could buy on my own. And that led to about like a year-long search. And I found a company that kind of fit my buy criteria. And I engaged with them in the middle of July, closed in the middle of November. And there was some like immediate challenges right off the bat, just in terms of the timing of the close, estimating the working capital and underwriting for that. In the deal. And then we had, I'm here in the Northeast, so, we're seasonal from like March to November, and then it's snow from then on. I walked into it with a delayed closing. I missed out on a lot of billables, and I was underfunded in terms of working capital. And then we didn't have any snow work. And then it was getting into the season and the cash flow challenges of being commercial, being net 30. Really, that turns into like net 60. So you're covering like 2 months of payroll just to get into the season. So like right out of the I ran into the cash flow issues, and all of my plans for, I want to build the system, I want to build the pipeline, I want to do all these things, turned into like just squeaking by and trying to move cash around and survive. And so that was 2023, was survive and kind of build up. 2024 was focus on profitability. So I was able to finish 2024 with a high EBITDA generation, build up quite a bit of cash. And then now it's trying to optimize for really growing and scaling the business and focusing on improving the processes, building out the sales pipeline, and kind of scaling up the business from here. The challenges of, I know that 50% of my business is up for rebid. So it's like, I'm thinking, I want to scale from where I'm at, but wow, 50% could go away if someone just comes in and bids under me.
You've got some good challenges there.
Yeah.
Yeah, it's actually interesting when you talked about, making that acquisition. I help a lot of companies not only source deals, but also analyze deals. I remember one in particular, it was actually the company was based in the Northeast. That was one of the biggest challenges I identified, was closing, late fall, going into the winter season, maybe snow, maybe not snow, working capital. So, I think you hit all the different challenges. So, but it sounds though you did a good job coming out of that and have built up some cash. But now you've been hit with many challenges business owners see in terms of you've got the renewals coming up. 50% is obviously quite a lot. Is it mainly residential you do?
I'm 100% commercial.
Commercial.
Yeah. There's a lot of like state work, which is probably, it's high revenue for sure. But when I look on like from profitability and from like an admin support, it's probably very low profitability and probably most of my headache. So, my plan for the rebid is really to just make it a number that I would like gladly support, or I'm okay like losing that just because it's a big chunk. It's not like I'm preparing to sell the business in like a year or two. So losing that chunk, I'm not worried about like where that would impact a valuation on like a historical like look back or anything like that. It's about getting the right revenue.
I know you said you often offline that you're just beginning to dive into LMN, do you have a good idea around your gross margin per client and just what are the contracts performing? Which ones are struggling?
It was a good story in terms of being able to post-acquisition, retained all the clients. I didn't lose any. I was able to last year push for price increases where they needed to be increased. My overall EBITDA margin is around 25%.
Okay, that's great.
It was much higher in this past year than the prior year. But I would say my gross margins are around 46 to 50 some percent. Some of the larger clients or some of my larger clients have a little bit better scale there, and they're probably around 55%.
Yeah, some decent numbers there. I think this podcast is ideal for some of these either up and coming companies, or maybe they're looking for some type of acquisition, or maybe some smaller companies. How do you, as we're recording this mid-January of 25, how do you go into the year and figuring out your priorities, how to scale your business? Obviously in one sense, you've done the acquisition piece, you could do more, but in back of mind, you've also got this big looming renewal question mark over your head. Who's going to stay with you? How do you go in to really have a clear vision going into 2025?
It's probably balancing fears, optimism, right? So I'm naturally an optimistic person, but I can also be oh man, what's going to happen here? So I know at one of my best and most profitable clients, they brought in a new, the board hired a new director of facilities, and his whole thing, his game plan is always bring everything in-house. So they executed that and kind of blindsided me at the end of 2024. So I know I'm losing that for sure. So as I look to where can I add chunks of business to replace that quickly and efficiently, one would be acquisitions, right? I could do that. But my thought process is, if I have to acquire another company to kind of build and repair the one that I bought, then that's a pretty inefficient thing. If I just got to keep buying to make up anything that I lose with the prior acquisition, I'm losing value there, right? And I don't think that that's a good spend. I think it's looking at strategic acquisitions, and there's one that I'm considering. It's a smaller company. It's about a quarter or less of the size, is maybe 10% of the size that I am, but it's a strategic acquisition in terms of I'm just going to pay the owner a percentage of revenue. I'm really limiting my downside in this. Maybe buying one truck. It's not an exciting business. The equipment's old except for one truck. It's one owner for 30 years with 4 employees. So it's very small. There's no systems. There's not a lot of goodwill in it. And it's basically his relationships with those clients that keep it coming back. So, I've approached this year is I know what I'm guaranteed to lose this year in terms of that one client. And then this acquisition is roughly about the same revenue spread over maybe 20 clients. So one, I have more areas to work and look for upsells because I've got 20 clients to go out and look and work. There's actually added admin and things like that make it complex. So I'm trying to evaluate the complexity of that same chunk of revenue. But I think this is, as we see more people retire and these businesses are smaller, right? And they're not going to get the multiples they want. They're not a real business with structure. I'm kind of approaching the acquisition of can I acquire contracts and maybe 1 or 2 key people or maybe one piece of equipment. So that's a deal that I'm working on right now is a $400K chunk of revenue, acquire one piece of equipment that I want. Because I would need that truck anyway this year, and then have the owner on an earn out because I could use his sales acumen or his estimation capability or project design capability anyway. It's a position I'm going to hire anyway. So it's looking at acquisitions in terms of safety, because I think where we're at in the market, it's definitely a time to be a little bit more cautious. So anywhere I can de-risk and maybe add an acquisition, add a chunk of business, it's pulling the trigger there. And then, so that's my approach and philosophy on adding an acquisition this year is to kind of look at very low risk opportunities.
I've got a ton of questions around that. How do you source those types of deals? Because, those are the people that they don't necessarily, maybe they might use a broker, but a lot of the time they're just trying to figure out how they exit. They may be thinking about it last minute. Maybe there's some health issues or some type of issue, and they're in that flux moment. How do you go out and try and find those types of deals?
Yeah, I don't have a lot of time to do any type of proprietary search at the moment. So I am like looking at all of the different broker websites and just keeping an eye. There's a couple of vendors that I have that I know the outside salespeople very well because they always stop in my office like too often. But they're also stopping at everyone else in these geographic areas, right? And so I've told them, hey, if you ever like come across like any of these owners who are seemingly like getting more and more frustrated or disgruntled or checked out, so to speak, like let me know. This is kind of like what I'm looking for. If you hear anything, I would happy to pay some type of like finder fee on that if you come across something like that. So it's kind of trying to leverage other people for the proprietary piece. I think this year I may like implement like through a third party marketing agency. I may just try to market to business owners in that kind of like one-off where their approach is, hey, we have an interested client in this industry for 26 years and trying to approach it that way to get some type of like outreach going, but kind of get it off of my plate.
Yeah.
And then the other is leveraging people that we know in the industry, so relationships with other vendors. So there's a tree company that we pull in when we get some work, and if we don't want to take the risk or if it's too big of a project for us, we'll bring in this tree company. They're actually right next door to us. So and the owner is, he's approaching. He probably wants to work like another 2 years. So I just reached out to him to let him know, like, hey, I don't know if you thought about it, but here's what I would like to do. It seemed like his accountant had already prepared him with what a value would be, but he doesn't have any brokers or anyone engaged. So it's a good time to engage with him and let him know like that we're interested. And he was like, oh, wow, like I hadn't thought about it. I had 2 years left. I wanted to continue to work. And I said, hey, you could keep working. I would like to acquire it. I would like to have you on anyway. So it's just trying to plant the seeds in some of those like local relationships of like people that we refer in as well.
No, that's cool.
Any place there's like synergistic opportunities or it's like easy for us to leverage, right? They're in our area. We run across them a lot. And then I was using the public bid system online to go through and see who's bidding on things and who are my competitors on certain projects, trying to like look up like who the ownership groups are and get a feel for who they are. And maybe at some point this year, trying to approach them with some type of outreach.
Yeah, there's some great nuggets right there for the audience. I've actually helped a couple of companies with look for acquisitions. And one of the things we've used is using a virtual assistant to try and get a list of companies within a target market, and then secondly use either the same VAs or different with some type of outreach, whether it be emails, phone calls, and even if you uncover one or two of them might be interested. I think that's super helpful. But I think the other thing that you're touching on, and I want to expand on that a little bit, is a lot of owners, they may not be ready, they may just be exhausted. So could you work out some type of deal whether it's an earnout, whether it's the seller financing, and maybe there's an opportunity for them to work in the business, whether it be something, whether they're out there selling again or client relationships or something, but it eases them into retirement if they're at that age.
Yeah, I think there's a lot of avenues to go down with that, because I know like the SBA now you have like roller equity. That's pretty cool. So there's that option. Hey, stay involved, or hey, seller notes, and we'd like to have you stay on. And the way like the tree company that's next to me, I basically can make whatever offer he wants, because I've got so many tools now with the SBA with the 10% equity rollover. So I have an option if he wants to keep equity in it. If he sees like, oh man, I want to be a part of that upside, or I want to keep a little of the chips in, or if he wants to, if he's looking at more stable returns, or if he's looking at, hey, I'd like seller financing, or I want to reduce, optimize for tax, right? If I take it out in installments, a chunk and then plus installments through a seller note, or if he wants to continue to work, but he doesn't want the stress, right? That's what I've heard a lot with this acquisition I'm working on now. The big piece of it is I'm tired of the stress. I'm tired of the liability. I'm tired mostly of like the admin, payroll, and everything being on me as like a small owner. So if you could take some of that I have a landscape architecture degree. I would probably more enjoy being able to like expand upon that and utilize that, but just not have responsibility for like all of the admin and payroll and
Right.
the liability associated with
So
running
if you
it.
take that off their plate, then they might actually start having fun again.
Yeah.
Yeah, these are all great takeaways, for anybody out there who's, thinking about some, type of tuck-in or acquisition. That doesn't need to be as, coming up with 100% cash and being, the old traditional way of acquisition. There's so many ways of, doing that these days, and just have to be a little bit more creative. So
the advantage is just being able to have like that flexibility. I know there's like a lot of large buyers out there, but being local, being like present in the market where, people clearly care about their employees, care about what they built, and are worried about like what that continues to look like if a new owner takes over, and just being able to be creative, maybe even pay a little bit more, but like structure it in like a creative way that addresses like all of their concerns, or maybe more of like how they want to like get paid out. I feel like it's a competitive advantage, I guess, for maybe like a smaller or more like independent acquirer.
So, and we're running out of time here a minute, but how, I hear two big challenges for you. You've got the looming, potentially, of all these 50% renewals, you potentially got some acquisitions to look at. Maybe there's a joint strategy there, but as a business owner, how do you navigate that? How do you have that clear vision and knowing where to put your focus or energy on? I mean, do you use any sort of outside resources or mentors or peer groups, anything like that, just to sort of help with that focus?
Yeah, I think the thing that I spent so much time in real estate and like multifamily investing that over the last like 2 years, I've been trying to shift the groups, because those were good groups, but they're not like not as relevant to like what I'm trying to do now, which is like have a pulse on the landscaping industry, understand what people are doing, best practices. Like there's so much within the way of like AI and EV and tech that is trying to keep a pulse. So actually it's been one of like my theme words for this year is like building community. And so I've taken the steps to like join a couple of business communities or there's like a blue collar millionaire is one that I've joined. I've joined their like elite like club, which is like just a more focused, high level, more experienced like mastermind group. And it's been good to like get in there and bounce ideas off. I would say there's not like as many landscapers in there, but it's business owners in services and trades that you can start to see what works. And if we're all approaching commercial customers, certain things work right to get in front of property managers. And then also too, it's been good to leverage like, hey, oh, you do gutters. Okay, perfect. I do landscaping for all of my commercial. I can bring you in for gutter. And there's a lot of like affiliate type opportunities there. I think the thing that I'm still trying to find is like the right group as far as like more of like a targeted like landscaping focused group, and understanding that I need to get around those people to make sure that one, I'm soaking up that knowledge and I'm able to give back to a community directly applies to what I'm trying to scale. I think I'm still exploring. That's why I did find like Wilson 360 and was just interested. I think there's like so many options. It's trying to find like what's the best one for me to be in. It's definitely somewhere I want to invest. I've paid consultants before. They come in, they run this, they look at your financials, they give you recommendations, and they're out of there, right? They're not sticking around for the implementation or doing anything like that. And I'm like, my finance background, this is all I used to do anyway. So now it's about like finding the right community to be in where these challenges come up and you're trying to wonder like, what do I do about hiring? What are you guys doing for this? How are you facing the different challenges throughout the seasonality? What is a good acquisition? What adds value? What's accretive? So I feel like that search is ongoing and it just takes time to find like the right community. So I'm trying to hone in on that because I know it's going to definitely unlock like this next phase of my business. So
I was part of peer group. I've been part of a group called EO, which is other businesses, and having the experience, share, and knowledge from both those types of groups, just to be able to make really informed decision making, really changed the scaling of my company. So definitely, I would encourage you to take your time and make sure it's a good fit for you. So awesome. Well, Chris, really appreciate you joining the call today. If people want to just brainstorm with you, get in contact with you, what's the best way for them to do that?
I would say email is usually best. Because I can provide my email. It's a little interesting. Like my LinkedIn is still, I still work like my W-2, the finance job remotely. So I haven't really converted my LinkedIn over. So like it's not people looking for that. It's not going to really tell you that much. But the email's probably best. That's Chris. It's CHRIS at green-ridge landscaping.com. That's probably the easiest. Just I'm one of those people that the only unread emails are the ones that are important. I'm like clearing everything else out. So like I'll see it there and it'd be like easiest to connect that way. And yeah, I respond pretty quickly. So that's probably the best way.
Awesome. Well, thank you for being a guest on the show today and sharing your experience, sharing your challenges, and good luck with your renewals and potential acquisitions. So I hope you have a great year.
Yeah, thank you very much.
Hopefully that was pure dead brilliant for you today. We've got some great Ironman mindset takeaways for your business and for your leadership role. This is Robert Klinkenbeard, the Commercial Landscaper Podcast. Check us out on all the different podcast channels. Check us out on YouTube. Like, share. Also check out our website, thecommerciallandscaper.com or wilson360.com. Check out some of the digital courses. Check out the book, The Ironman Mindset for Entrepreneurs. We want to make sure we have a pure dead brilliant day. Cheers, everyone.